Welcome back. Well, let's focus on the big deal. Adani-owned Ambuja Cement has acquired 100% stake in Penna Cement at an enterprise value of 10,400 crores. What does it mean for the industry? Who's under pressure? Who can gain? Well, we have Mangesh Badang, Senior VP Research at Centrum, who joins us on the show. Hi, Mangesh. Good morning, and thanks a lot for joining in. You must be getting a lot of calls pre-market, but just fill us in with a quick analysis. First up, I guess you'll read this deal as positive for Ambuja Cements, because they're going ahead and, acquiring this, expanding their presence as well. Your view first on Ambuja Cements.
Hi, good morning, Nigel. Thanks for having me. I look at this as a very positive deal for Ambuja, and basically the way the group works and the way the aggression that they have shown in growing in the industry once they have set foot on this space is very, very, very good to hear. Basically, we feel that this company with this acquisition can, actually expand its footprint in the southern market where they were not present earlier. And it will also help them grow across, in the country and, show superior volume growth for the next 4 to 5 years. I think they would surpass their target, which they had set for themselves of achieving 140 million metric ton of capacity by FY28. They would surpass it. And in fact, we were looking at this as a very aggressive or, challenging target. And now the way things seem, I think they would surpass it. Slowly but surely, they have added almost 24 million tons of capacity through acquisitions. And the good part is that they have not overpaid for any of those. So in terms of selection of the assets, selection of the companies, and coming up to the price of those, I think they have done a phenomenal job.
Okay, all right. They're going into the south, Mangesh, and we know for the last few years that utilization levels over there are very, very low. So we'll have to see how they ramp up. But we know the group, once they get into a particular space, they can ramp up the asset, they'll sell more cement, and in all probability, they'll turn it around as well. So my question to you is, since you have a larger player that's coming in there, it could lead to further consolidation. How do you approach the smaller names, the likes of Sagar, India Cement, Orient Cement, that have some presence in that belt, and there's always some rumor there. So how do you approach that? And do you see it as a big risk to players who already have an established presence out there, namely Ramco and Dalmia?
Yeah, so see, as you rightly said, South has been a fragmented market for a very long time. And if you look at the presence, there are very few people or very few players will have close to say 8 to 10% of market share. But you have number of players which have market share which is ranging below 5% or less. So what we see is that definitely this will actually lead to some consolidation. And once these players get larger, probably, the pricing discipline should start coming in. The kind of volatility that we have seen in the prices should not be there. I don't think that it's a risk to some of the smaller players just because of the entry of new players, because what we have seen is that some of the smaller players, they do have their own niche as well as the areas wherein they operate in and wherein they have been able to control the distribution as well as the supplies in those markets for a very long time. So no risk as such to those. However, what I feel is that given the kind of measures these companies, the large ones, are taking on cost improvement, if the smaller ones do not follow that, and if the cost of those smaller players remain on the higher side, then obviously profitability wise they would fall behind, and it may not be very feasible to run the cement plant for them, and that should lead to consolidation. For the larger players, I think, better the consolidation, probably they would be in a much better place. But if there is a 4-horse race in one region, it might lead to, a sustained period of pricing pressure. So very difficult to comment on South as well as Ramco and Dalmia at the moment, but I don't see that as a very, very negative write-up.
How big a probability do you assign to pricing pressure in that region, given that, ever since the group has taken over ACC and Ambuja, have you seen any major change in the prices in the regions that they currently operate in?
No changes at all. In fact, prices across the regions have been operating, based on the demand-supply dynamics. And if you look at South as well as some of the Eastern region, the prices are, very close to the bottom. So for going below these levels, I don't see that, these prices will go below these levels. And in fact, there is some chance of improvement once the demand comes back in the second half of FY25. With ACC Ambuja coming, Adani coming with the group, they tried to change certain policies in the way the discounts as well as the invoice pricing happens with the industry, you're not successful and they changed back within the 3 months. So currently there is no change just because of that.
You know, Mangesh, we have been speaking on and off TV, for the last, I think, 12, 13 years or so. And a lot of these assets that we were thinking for many years, will they fold up, will they not? Kesuram got done, 6 months or so ago. Sanghi got done. You have this asset as well. Penna, we were talking about an IPO, I think, 5, 6 years ago. And this has got folded up. Clearly, this consolidation is taking place. To play this theme, since South could be in focus as well, which are the companies that have good fundamentals and could probably be an acquisition target as well? That could be secondary, but are well placed as of now, particularly on the cost side.
See, I would not like to name the companies which could be targets because definitely we don't know where it is going to happen. What I can do basically is I can give you the list of companies names which are trading at say less than $50 EV per ton, and probably then one can take a guess of which of these could be the acquisition targets. But if you look at the pattern in the companies that have been sold till now, most of them were under financial or some kind of balance sheet stress. So be it Sanghi, be it Penna, or in now, in certain cases, My Home Industries. So that is something that, one has to look at in terms of, where the next stage is going to be. So the ones which are trading at or below that $50-$60 EV per ton, so we can say Sagar is there, Saurashtra is there, and so Heidelberg comes close to that, but slightly higher than what we are here. But the rest, I think, in the smaller ones, so NCL, the likes of NCL, KCB, they are relatively smaller to make any dent, to be honest. And there are certain other businesses associated with it, whether wants to go it.
All right, Mangesh, we'll leave it on that note. Thank you very much for joining us today and giving us your perspective on that big deal.